Hello, everyone, and welcome to today's webinar, Performing a Sales and Use Tax Overpayment Review and Implementing the Findings into Your Compliance Process. Today's webinar is brought to you by TaxConnex and Invoke Tax Partners. My name is Liz Brigham. I'm really happy to be here as your host today, and I hope to help you get the most out of the programs. A few things I'd like to highlight. One is you can write in, ask your questions, share your feedback using the GoToWebinar questions box. And if you want to say hi and let us know where you're joining from, we'd love to give you a warm welcome. Hello to Victor joining us from Pennsylvania. Lydia's joining us from Indianapolis. So great to have you here, and we'll look forward to seeing many other friends write in as well. John coming from Toledo, Ohio. Excellent. Well, thanks so much for saying hi. You can download the presentation slides, so the handouts from the GoToWebinar handout section. Today's webinar is 1 hour. We'll 4 polling questions, and as long as you respond to 3 of the 4 questions and remain logged in for 50 minutes, you will earn your CPE credit and you can access your CPE certificate directly from your Incourse dashboard. Of course, we hope that you'll interact with all of the polling questions, and I'm sure you'll stay with us the whole time, but want to make sure that you know what the requirements are for CPE credit. I'm on LinkedIn. I'd love to connect with you, and I always recommend connecting and following with our sponsor companies and also our speakers. It's just a really great way to build your professional network and just to know who you can go to if you have questions come up about topics like this one. So moving on, I want to give a warm welcome back to Brian Greer, who is the Chief Strategy Officer for TaxConnex. Brian is a partner with TaxConnex, and he has several decades of experience in the sales and use tax space. So Brian, it's great to have you back here today, and a warm welcome to Scott Schwarner, who is joining us for the first time. He is the National Director of Sales and Use and Severance Tax with Invoke Tax Partners, and really happy to have Scott. So Brian, can I turn things over to you? You can tell us a little bit more about TaxConnex, introduce Scott in more detail, and also just dive into the agenda about what we'll cover today. Thanks so much for being here.
Yeah, sounds good. Thank you, Liz. And I'm glad you're able to get through the title there. We tried to make it as long as possible for you to make that a little bit challenging there. So good job getting through the title. But yeah, excited to be here with you guys, and definitely excited to have Scott with us here today as well. Scott and I have worked on multiple projects over the last few years, and he brings just a tremendous amount of knowledge and experience to the group here today. So, Scott, I'm glad you're here.
Appreciate it.
Before we get started, we'll each kind of give you guys just a brief overview of our respective businesses, and then I'll let Scott walk through the agenda and kind of get into the meat of the discussion. But from the TaxConnex perspective, if you've not attended our webinars before, we are very focused in the sales and use tax arena. And specifically within sales and use tax, we focus on the compliance outsourcing. So we work with companies that have a multi-state sales tax obligation, but they tend to lack either the knowledge, the ability, or the desire to do the compliance work internally. And specifically what I'm talking about is the preparation and filing of the returns. So in those scenarios, they can outsource that work to TaxConnex. Now, the way Scott and I work together is that his business is really more focused on what I refer to as the tax technical side of things, rather than the compliance side of filing and remitting the returns and the payments to the jurisdictions. So Scott, I'll let you tell us a little bit about Invoke.
I appreciate it. Invoke Tax Partners is a national SALT state and local group. We specialize in sales and use taxes as well as property taxes, including real estate and business personal property. On the business personal property and real estate side, we offer a full complement of services from consulting services through to compliance and full outsourcing of that function. And then on the sales and use tax side, we do offer general consulting services as well as overpayment review, audit defense services, and then obviously best practice training and reviews too as well. And then all the one-off type services that come along with sales and use tax, from voluntary disclosure agreements to nexus studies and utility studies and all those different things that come in play there too. We also offer severance tax, which is a complement service to our sales and use tax team on the oil and gas side. So serve nationwide. We have 13 offices across the U.S. So we have a great team in great locations to help serve our clients across the board.
Sounds perfect. Thanks, Scott.
Yeah, and here is the agenda for today. We're going to go over the benefits of performing an overpayment review, the requirements of a taxpayer or client during an overpayment review, implementing overpayment review results into daily best practices, strengthening your compliance process with an overpayment reviews, and then ongoing sales and use tax compliance issues that may arise.
So Liz, I think we've got the first poll here for you to pull up. And then once you get that going, I think, Scott, if you can just, great background on Invoke and what you guys do, but maybe also just briefly describe your background personally and kind of your history in this state and local tax world.
Perfect. Well, like most people in the tax world, we usually stumble into it. I was a intern for the Texas Comptroller's Office while I was in college, where I completed the auditor training program with them one semester, and then the next semester got to work out in the field. After that, I spent a few years with in Big Four in sales and use tax consulting in the Dallas, Houston area. And then spent about 10 years in industry with PepsiCo, Frito-Lay, Textron, and Dow Chemical. Most of that in sales and use tax. I did do a stint in property tax too as well to round out my career. And then for the last 14 years, I've been with Invoke Tax Partners running the sales and use tax department on a national basis for our clients.
Perfect. And we see
Great.
are you able to share the results, Liz, or can everyone see the results here?
Yes, the results of the first polling question are on the screen. And it looks like we have a representation from each of these industries. And if you wrote in other, then feel free to let us know what industry you're in. So thanks everyone for responding.
Yeah, it's good. We have a good mix of people too as well. So that's good as well. So we want to start with the benefits of performing an overpayment review. We divide this into a few different categories here and want to hit on and expand on a few of these as we go through. From a benefits perspective, obviously the initial goal of any overpayment review on the sales and use tax side is to recover any taxes that were paid in error. And that's always the step number one or main focus of any of these reviews. There are a number of things obviously that come out during that review and can also be a benefit to our clients and to taxpayers across the U.S. Identifying and correcting potential exposure. This is always an interesting part of the process because there are going to be things that we find. This is where a lot of the work comes in on the front end, working with our clients, discussing operations, vendors, accounting, all the different structures, how that tax decision is made, all those different things that come up at the initial phase of any of these overpayment reviews will help us kind of hone in on different ways to identify and potentially correct any of those exposure items. Most of the work on an overpayment review is done on a contingency fee basis, so we don't get paid unless we find money, and so there's really no upfront cost on that, and so it's a great way to get a look at that and without having to upfront any of that initial fee. The matrix and process corrections. This comes on the back end. Once we finish and complete an overpayment review, then there's an opportunity there to look at the matrix, look at any of the processes that may need to be done, and then work with the team to help rectify those on a go-forward basis, whether that be internal and sometimes even with our vendors or and some of the things that they're doing as well. And then finally, implementing best practices and training with staff. This is an important part of it. Working with ways to streamline, make it more efficient, identify ways to get better reporting, and then obviously training staff. And we do that different ways too. I'll dive into that a little bit later too as well. But training and how we train each department or each group within that decision process is important. The next piece is when to perform a review. Obviously, if you're just looking to get a better handle on what you're doing, any time is good, and get a good oversight of that. But a few other things that can happen during the course of your business that may warrant a review. Anytime you install a new ERP system, anytime software is involved, things can change. Accounting structures can change. How things people are choosing those accounts, cost centers, all those different things that can affect material groups, all the different things that come along with that can greatly affect how taxes are accrued or approved during that process. And then pre and post tax software implementation, obviously you're going to have changes once that happens in running things through there. So oftentimes we come in before a review or before an implementation to get a handle on issues, identify those so that we know how best to correct them going forward. And then we also do post-review implementation reviews as well to see if those things were corrected and we can keep them moving forward. Changes in AP or personnel or vendors. This actually can create a lot of issues. Sometimes there's not good manuals on training and how to do those jobs. And so oftentimes tax gets turned on, tax gets turned off. It doesn't get tracked properly or entered into the system through AP or personnel or on the buyer side too as well. And then oftentimes, as you know, vendors have all these similar issues, and so they turn them on and turn off tax too as well. And so it's always important to recognize that when you're going through these, if there has been turnover in any of the personnel or vendors as you get new vendors too as well. Material changes in tax accrual amounts. Obviously, if there's a spike one way or the other, then it's always a good time to review. And sometimes those can be done on a 3-month, 6-month basis, or sometimes it's a full statute of limitation review where we're going back 3 or 4 years depending on the state. And then acquisitions. We see this more and more in the environment that we're in. And so as acquisitions comes in, obviously your business is changing and being able to adjust to that and understand that and know how that affects both from a compliance standpoint, from a collection standpoint, and then also from a purchasing standpoint is all important parts of doing those reviews and a great time for you to kick off one of these types of projects. These are some of the larger industries or events that benefit from an overpayment review. Obviously there are others, but some of the more common ones are manufacturing. There's lots of great exemptions out there. Every state is a little bit different, and so adhering to those rules and guidelines in each state is always a challenge in getting those right. And so I always tell people, majority of our clients know the base manufacturing laws and do a good job of taking advantage of those. Our job is always to come in and expand and widen and lengthen that manufacturing line to see if there's any things that we can pull into that and help take advantage of. The oil and gas industry is one that is always striving to get that oil and gas up as fast as possible, and so it's always important for them to do these reviews because there's a lot of times where there's a lot of service providers that are doing a lot of things that they haven't done before, and a lot of times it's just easier to charge the tax than it is to deal with all of the different rules and regulations. So we see a lot in the oil and gas industry where there's a number of recurring issues and a lot of vendor turnover and a lot of multi-state type issues that come into account. For-profit hospitals, obviously not-for-profit are exempt in most states, and so for-profit hospitals have some exemptions available to them too as well, which and are always good to look at. Large restaurant chains in many states are considered manufacturers as well, so there's some exemptions there that they can take advantage of, as well as a number of resale exemptions. Direct pay holders, obviously, that is becoming more and more common as more and more of our systems gets automated, and so a lot of people are going to the direct payment process in different states, and so it allows for each taxpayer client to make those decisions on their own, and so it's a great way for individuals to make those decisions on how things are being used. But as you know, oftentimes that is only good as the people entering it in, and so coming in and reviewing those and taking advantage of those is always a good opportunity. Usually with direct pay holders, you're talking about larger taxpayers, and so it is a lot more transactions moving through there, and so being able to review and analyze those on a continuous basis is sometimes difficult with staffs of current tax departments. Taxpayers under state audit, it is always a great opportunity to use overpayment reviews as a way to offset any liabilities that may be found during an audit. Typically they're sampled in some way or another, and so being able to use those credits to offset any assessments that may be identified or are a great way and a great time to do it. And then there are other industries with exemptions that can't benefit from it, and happy to work through those too as well.
Hey, Scott, just a couple of questions there before we move on. And we've got a pretty large audience here, so there could be a lot of different levels of experience and expertise from a sales and use tax perspective. But just to kind of frame this up initially overall, we're talking about the sales tax that we're paying on vendor invoices and/or accruing on vendor invoices that did not charge a sales tax. That's the overpayment we're talking about here, not what we're charging from a sales perspective, correct?
Correct. Yeah, thanks for bringing that. Yes, this is a review of purchases that taxes were either paid on the invoice to the vendor or were accrued by the taxpayer or client during their operations, and reviewing those to see if there's any opportunities for overpayments or taxes paid in error.
Perfect. And this will be kind of a loaded question, and you can tell me that there is no right answer to this. But when you look at companies, are there purchase thresholds that you say this would be a good target for this type of overpayment review? You've mentioned the industries here, but as an example, TaxConnex, we don't buy a lot of materials, right? And we're not going to be subject to really any exemptions, so we're not really an overpayment review opportunity. But is there kind of a purchase threshold where you say, if you're purchasing X amount, this can be worthwhile, or is there any guideline like that at all?
Yeah, there is. There's and each company is a little different, and I will say this: the industry is important, obviously, and then secondary to that is the spend. We don't always put a threshold on the spend. The industry sometimes is more important, but and it depends on obviously the state and the items being purchased. But having equipment that you're doing in less manpower is important, so that you have repairs and all those different things that go along with that is always important to that too as well. But there, I always roll back to the audit piece too, because a lot of those thresholds go out the window when you start getting audits too as well. And so there's things that we can do to help reduce those assessments. And so some of the thresholds, although are important, maybe from a scoping standpoint, um, a lot of times they're not as important once that audit has been kicked off, because as you know, once an audit gets going, there are um, um, knowledge and ability to get through those audits that can affect how much gets assessed and ultimately how much gets paid. And so being able to reduce those assessments is an important part of that process too. And so although we're trying to find refunds and an overpayment, once you get into audit, you're also talking about assessment. So it's a double two-headed pillars there that you're working through, both assessments and overpayment reviews.
Yeah, perfect. That makes sense. Thank you.
Some of the requirements of a taxpayer during an overpayment review. This is always an important question. We all are busy. We all have things on our table, and so adding projects and adding services like this can be a concern. And so finding ways to minimize that and reduce those fears is always an important part of that process. And so over the years, things have changed. Things have gotten more and more digital and electronic, and so it has made this process less and less cumbersome. And so being able to get through these reviews is significantly changed over the years from when I started 25 plus years ago. The big portion, I'll just go through these phases. We have a couple slides that we'll dive into a few of them as well. The gathering data and documents phase one. This is where we'll have some type of kickoff call where there's an understanding of your business operations, any concerns that you may have, anything that you've already identified, maybe past reviews, issues. We talk about how all your processes are from an accounting structure and accounting systems. And then gathering data back is the next big piece of that. We'll dive into each one of the items, but that is the biggest piece, is usually getting the data. That has changed over the years because most of the reports now that we require are pretty standard reports in any system now, accounting system. And so getting them out is usually not difficult. They're usually a standard canned report. It may be 2 or 3 reports that we have to link, but for the most part, it is a pretty standard report now, and makes that a lot less difficult from a time and effort standpoint. Phase 2 is when we do that detailed review, going through each invoice, reviewing those transactions, making tax determinations, reviewing vendors, reviewing projects, reviewing contracts, all those different things that are part of a detailed invoice pool. Let me take one step back. Actually, we have the data request on the next one. I apologize. And then the next is filing the refund claim. Once we've done our review, we've come up with a number. We've talked with you on any issues or concerns, got your approval. Then it's filing that refund claim with that taxing authority. And then phase 4 is the auditor review of the claim. This is where we're going back and forth with them, providing them supporting documentation, answering questions, negotiating back and forth, stating our case, doing all the things necessary to get them comfortable with that and building that relationship to get them through that process. And then obviously is the next step, phase 5 is getting it approved and the receipt of the refund check. And then if necessary, potentially protesting any non-approved transactions. There are instances where an auditor, for one reason or another, can't approve or won't approve certain items, and then we have to go to the next step in working with the state or a different organization within the state to get those approved. And then final phase is a very important phase for most taxpayers and clients that get this service is implementing and training at the very end. And so finding ways to correct potentially all issues going forward, or at least mitigate as many as we can, better understanding of that tax process, and then obviously any type of training that needs to be done within the department. within the company.
So
Next
Scott,
slide.
this might be a good
Yep.
time for a quick question here from Cynthia. She has a question slash comment. Some states require you to go to the vendor first before you can file your own claim. How does that work into the overall process flow?
Yeah, 100%. And so if you go back one slide, when we're in phase 3 or in between phase 2 and phase 3, once we've completed a review, understanding we don't ever want to create a situation where we create more issues. And so if it's a smaller refund claim or just a handful of vendors, it is sometimes better to just go directly back to the vendor. In states that require it, then going back to that vendor and working with them and doing that, it can be sometimes an issue because you're not using that vendor, or that vendor has changed businesses or changed hands, and that can be difficult. But those are all the types of things that we would work through as well on our end to help resolve those issues. And we go back to vendors on a number of issues, especially like on utilities and things like that are a little more cut and dry. If there are any type of gray issues that arise during a review, then sometimes it is better to go back to the state so that we get the blessing of the state, approval of the state. So it's a documented issue going forward. And so really reviewing that, going back and forth with the taxpayer, the client, and helping them understand what you have found and how best to move forward is an important part of the process. So doing that with the vendors is always an important step. And from a review standpoint, we typically would handle all of that communication back and forth. It does sometimes help to have your letterhead on there when we're sending that, just because they aren't getting it from a third party. But we would manage all that process and working with that vendor and correcting that issue going forward too as well. Good question. Perfect. Some additional requirements of the taxpayer. One of the things that's always has to be done, and we do this both from a data perspective and then also from a compliance sales and use tax return perspective, is reconciliation of those sales and use tax returns back to the data. Brian and his team do a great job with reporting, managing those reports that are inputted, and also on the back end on how the things get implemented and documented. Any adjustments that may arise is also an important part so that we can reconcile it and get it back to that. The states, both from a sales tax paid, collected and paid, and then also from a use tax perspective, they like to see that. They like to have that done. And so this is an important process and something that maintaining those records and any adjustments that are made is super important, and something that we do prior to any filing so that we can present that to the state and have that done. So it's good to have a partner like TaxConnex that can provide those to us, and we can work through those and have them in an organized manner so that that makes that reconciliation process easier when that's being done, especially when we're talking 3 or 4 years later in some of these cases. And many times too, that can be multiple files. We have a number of clients that have multiple systems that they accrue use tax in. And so, having those and documenting those and showing how they're linked together is an important part of that process too. And then of course, on the AP transaction data file that we talked about earlier, this is typically now a standard file. This is invoice level detail, which is going to be, invoice number, vendor name, vendor number, invoice number, amount and date, any accounting information, AFE, cost center, material groups, all the different things that are, unique, maybe PO to your business. Those are the type of fields that we're looking for. One of the things that has changed over the last few years is more and more states are now requiring proof of payment. And so we are on the front end now on our data file is including that payment information, whether that be a check number or ACH or EFT. number in there, as well as the amount to help with that process. Most are requiring now that you prove that that invoice was paid and that tax was paid for that full amount and wasn't short paid or anything like that. And so it is one additional step that we're having to do more and more across the US. And so if we can get that up front, it's always a good thing. Sometimes it's included in our AP data, sometimes it's a check register, or sometimes we just pull information out of their system from a check number, check date, cancel check, sometimes even if you're paying by check, otherwise an EFT type report. Some of the other files that we need that are usually, again, pretty standard, but a chart of accounts, an asset listing, AFE reports, PO reports, cost center listings, contracts, schematics of operations. Not all of this has to be given up front, but as the project progresses, a lot of the things we do end up coming back and getting, especially some of the contracts and operations, schematics and designs and things like that to help support and further document the reasons why and how things are being used within the process. Again, most of those reports for most of our clients, they're canned reports or reports that they have pulled before and they can get to it. And so this usually is the biggest lift. And once that's done, then everything kind of rolls back. Providing access to invoices. This has changed. When I first started a number of years ago, it was all hard copy. We were in conference rooms with boxes and boxes and boxes of records, and I always joked I was a copy repairman more than anything my first 6 or 7 months at Big Four. We did spend a lot of time in front of a copier making copies and doing that, so got pretty good at fixing those. Even got some time on microfiche and tapes back in the day, but now most of us are scanned invoices and saved electronically, and so getting access to those scanned images is an important part of this now that usually can be extracted on a large scale and pull hundreds, maybe even thousands of invoices at one time. What has forced our industry to change is opening and closing documents obviously can be cumbersome, and getting those out is something that we have to work around. So we actually have some software now that allows us to take tens of thousands of transactions at a time, invoice images, I should say, and upload them into our software where it reads them and creates a taxed and non-taxed population. It pulls a lot of the information. Sometimes it's difficult because they're handwritten and the ink is not great, and all those different things. And so it's not always perfect from a dollar capturing, but greater than zero is usually, we run around a 95, 97% accuracy. So it's a great tool. It's a great tool for our clients as well. It allows us to do a more complete review. We upload a lot more transactions now just so that we can use the software to our advantage and get a full picture of what is being paid on invoices. We see it a lot even with direct pay holders that or invoices that got accrued on, where they'll also have tax paid on them. It may have got entered as freight or whatever it may be. And so it's a great tool also to see if there's any duplicate payment or duplicate tax transactions too. So been a great tool internally and externally, and something that really we can take advantage of and do that complete review that is so important to your operations, because as we all know, small dollar transactions can be a lot and they add up. And so the big ones are always easy to find and work through, but those smaller dollar ones are important, and just because those numbers can add up when you start looking at thousands and thousands of transactions. Assigned power of attorney, obviously this allows us to communicate and sign and file the refund claim and then work directly with the auditor. It's very limited. We don't have any real authority other than, unless granted, just to work back and forth with the state and the auditor as well. And then a plant tour and operation review is always a great thing to do. It's something that we try to do on every project, and reviewing those plans, walking through them, getting an idea for the process, understanding equipment, who they're using from a vendor perspective. And so those type of tours are invaluable and, quite frankly, one of the funner part of our job. And so being able to see things made is always important in understanding processes, and then being able to communicate that when it comes time to start negotiating with the auditor. So always important, and something that we can use in our advantage too as well. I think we have a poll question again, so everybody gets their 3 out of 4.
Yes, that's right. So we're going to go ahead and launch our second polling question. This polling question should appear on your screen. The question is, when thinking about sales tax, what is your biggest concern? So is it over or underpaying of sales taxes? Maybe it's keeping up with changing nexus rules, understanding the taxability of your products or services. Perhaps it's being audited, maybe those ongoing filings. But go ahead and let us know if you're having any issues at all seeing question that's up on your screen. Feel free to write into the questions box with your answer. And Brian, do you see any questions that you want to address while we're waiting for the audience to respond to the poll?
Yeah, we've got a couple here, and I'll throw this one at you, Scott, in terms of, you kind of touched on it earlier, but from a time commitment perspective, what would a taxpayer or a client, what would that look like on their side in terms of how much time they need to invest to get you what you need and to participate in this process?
Yeah, no, great question. So, typical kickoff meeting involves us being on site if there is a operation plant that we need to tour as well. That's part of that. So usually an hour, hour and a half for that, and then the operation, understanding your accounting, all of those, kind of the kickoff, normal kickoff, is usually anywhere from 30 minutes to an hour and a half, just depending on how sophisticated and any issues that may be arising during that, and getting through those. The next piece of that obviously is gathering those files as needed. Again, depending on how, if you've pulled this or how familiar you are with that system. We sometimes have to involve IT, sometimes it's just the accounting team that we deal with. And so that's the next big piece, and sometimes it's difficult to judge. Sometimes it's literally minutes, and sometimes it'll take 2 or 3 weeks of back and forth of working with IT to get that report as we needed. And so that's usually the biggest upfront piece, and then obviously getting access to images, invoices, whether that be hard copy or electronic invoicing, and most of the time that's usually just a read-only access to it. Other times it's linked into the data. There are other ones that we can just extract all images and do it that way, and sometimes that's easier. And so there's a number of different ways we can work with it. We have an IT team as well that works with our clients, and sometimes we can pull that data on our own, depending on the system. We're familiar with a number of systems, so sometimes we can alleviate that burden completely and do that work if we have kind of read-only access to those systems. And then after that,
sounds good.
Everything kind of falls back to us until we finish up with that review. And then there's usually some questions about a project or a piece of equipment or a service that has been purchased, maybe a larger project that may be done, expansion, whatever it may be. And so we'll come back and work through those things. Sometimes an invoice will say part 1, 2, 3, 4, and getting an understanding from a buyer or from a plant manager or operations specialist there's always a good opportunity there to have those discussions. And that's usually we send the questions beforehand, and then there's a response meeting, and those usually last 30 minutes to an hour, going back and forth on those. Most people are pretty familiar with their operations and can get through those pretty quickly.
Sure. So probably largely dependent upon how organized the business is, what systems they have in place, how IT savvy they are will influence, I guess, how much time they need to spend. That
Yeah,
makes a lot of
100%. And
sense.
past experiences with audits and things like that, because usually if they've done or been through a tax audit, then typically most of these reports are have been pulled and can be pulled again pretty quickly.
Cool.
Great. Great. Well, we went ahead and closed the polling question, and it does seem like we have a mix of concerns here.
Yeah,
No surprise. So I'll close this, and we'll be back to the presentation.
perfect. It's always good to have a good mix there too as well, and that's why we put those options up there, because they are usually the ones that most of our clients and taxpayers out there have over and over and over again. So good to see those responses. The next is implementing overpayment review results into daily best practices. These reviews are great, obviously, of getting money back and being able to put that on the bottom line and saving money, and that's an important part of the process, and obviously most of the time the initial reason for it. But correcting things on a go-forward basis is always important, and something that we strive to help with going forward. We always try to consider ourselves an extension of the tax department and working through that and helping make those corrections. So some of the things that we'll work through post review, obviously, are any tax matrix, tax software, and tax process corrections. When you're thinking about errors, it's not just yes, it had tax, or no, it didn't have tax. There are obviously tax on exempt items. There are duplicate tax where you both paid the tax and accrued. There are rate issues. A lot of times people will choose the wrong state and charge the wrong state, or they'll only do the state rate, not the local rate. So there's a number of different rate issues that happen. As you guys know, any of that have to deal with sales, that can be difficult. And so correcting those and identifying those is important and part of our process too as well. Tax accrued in error, obviously choosing the wrong coding or whatever it may be, and tax got accrued on something that shouldn't have been. Any type of wrong coding, working with the AP team, maybe the buyers or PO team, to work through those is also a different error that happens. Any out of states, I talked about that a little bit. And then I had a little note here. And then a lot of times we're seeing it more and more too, is because laws have gotten so complex, more and more people are just charging tax and not worrying about exemptions and taxability on their sales. It's easier just to charge it and see what happens. And so we're seeing that more and more across the U.S., especially with some of the nexus rules from an economic nexus standpoint. And so, figuring out ways to work with vendors, back to that original question about vendors, is working ways with vendors to get that corrected on a go-forward basis. Implementing best practices and strategies. This can go a lot of different ways. How decisions are made. We try to apply the old 80-20 rule out there, is correcting as many 80% of the things out there, and getting those as right as we can, hitting the bigger items. Small errors are going to happen, but if we can correct the majority of the larger errors or the recurring errors, then we're doing really good there. And then any type of thresholds that you may want to look at prior to. I know when I was in industry, we had over, I think it was like 200,000 had to come through the tax department from a purchase standpoint and get sign off on taxability prior to it going out. So we were reviewing a lot of big projects, a lot of big equipment spend, things like that. And so those are the type of little things that can make a big difference, especially when you're talking about larger dollar items. Correct any potential exposure issues. Obviously, these are going to be identified using that software that we have. We obviously have a non-tax population. That's where our knowledge and back and forth with the taxpayer comes into play, in understanding what issues or potential issues there may be, and testing for those, identifying those, and then figuring out ways to correct them. Sometimes that involves a voluntary disclosure agreement, which is kind of an anonymous back and forth with the state, where you get some advantages of reducing interest and pass-through penalty, and then coming clean on that tax dollar. It's usually for larger sums of money, but it is an option. Or just simply working with your vendor to make sure that they're turning that tax on going forward for those certain items. Clearly, if it's a mixed use vendor, a master car that sells everything from brooms up to big motors, then that complexity is different there. But if it's a all or nothing type vendor, then obviously working with them to resolve those issues on a go forward basis is important. Staff training for respective roles in sales and use tax process. Um, you know, this is one thing that being in industry helped me see that, because there are a number of different people involved in any single tax decision. Obviously, you have the buyer or the PO creator, um, and then you have obviously maybe a tax team, tax decision, and then payable on the back end, where they're doing the entry of the invoice and identifying anything that may be on there, whether it got taxed or not taxed. And then obviously even past that is the approval of that invoice. So there are a number of different people that touch it. And so understanding that, and being able to analyze that is a great way to um, train the different roles within that. Oftentimes when we do trainings, we'll do a training for tax team, we'll do a training for the AP team, and maybe do a training team for the engineering or buyer team, whatever it may be, and better understanding and training to their role. And so understanding your role in the process is important. And then ensuring accurate and timely return prep, filing, and compliance. A lot of things are going to come out in a review, so it's important to understand those and be able to get through those and then apply those and make the job of TaxConnex and their team, and your compliance team easier and better. Always important too as well. Next slide. Strengthening your compliance process with overpayment reviews. Some things here that are important to note is provides a great insight to all aspects of your company. Obviously, talked a little bit about this, but your operations, your accounting, purchasing, sales, compliance, all those are involved in this process. And so being able to interact with each one of them and better understand how their role is directly affecting the bottom line is important. Issue and concerns brought to light can be planned for and corrected. Obviously, we want to try to correct as many we can. If not, if they can't be corrected because of some complexity, then being able to plan for them and account for them and maybe even reserve for them is also important. Or maybe just have a quarterly or yearly review of those known issues is also an important step. In some cases, better reporting post-review. You can find a lot of different things that are maybe necessary to help you do a quick review or analysis. And so adjusting those reports, adjusting those systems so that you can get better information and better data out is always important. And then refining the number of returns and return frequency. Obviously, when you're doing a detailed review of that compliance process, if there's things that we can do to turn a monthly return into a quarterly return or a yearly return because of volume and things like that, then those things will come to light too, and we can help reduce those filing frequencies and maybe reduce that compliance burden as well. All right, next poll question, unless we have any other questions out there.
We do have quite a few questions, so let me launch the poll quickly, and Brian, I'll let you go ahead and determine what question from the audience comes next. So the third polling question is open. Do you or your clients currently use a sales tax calculation platform? So poll is open, please respond, and Brian, let's take a look at a question.
Yeah, we've got quite a few here, so we'll take one here while the poll is open, and then we'll save some time at the end. But so Scott, if you're doing this overpayment review and you're filing some type of refund with a state or multiple states, how concerned should you be about, triggering some type of audit or deeper investigation by that state before they agree and issue that refund for you?
Most states, it does not trigger one. There obviously are situations where it does, and there could be additional an audit that gets kicked off because of it. We don't see it a lot unless most larger taxpayers are on a cycle already or have been through a cycle already. And so, especially if they have found deficiencies in the past, they're going to come back again. And so we have seen it occasionally, but it doesn't always happen. And that's where that in between phase 2 and phase 3 that I talked about is once we've completed that review and identified the transactions and dollar amounts associated with those, that's where we come back to the taxpayer and we work through that and do a little bit of analysis of both how many vendors, what's the dollar amount, and then if there is any exposure that is identified, we don't want to have a $200,000 exposure item and a $50,000 refund claim. That doesn't make a lot of sense to file that refund claim. So in that case, obviously we would work with the vendors to try to get that refunded and then use the exposure item. We would work to obviously correct that and fix that going forward. So that communication back and forth obviously is super important. If an audit does become of that because of the refund claim, then obviously working through that with the taxpayer would be something that we would be typically engaged into as well.
Perfect. Sounds good.
All right, we'll go ahead and close the polling question. And it looks like we have about a third of our audience today using a well-known platform, and then either not one needed or a mix. So at this time, I'm going to close the poll. Thank you everyone for responding. Hopefully what you're using is working well for you, but certainly know that Brian and his team have a lot of good solutions in mind if you're looking for some ideas.
Yeah, thanks, Liz. And I'll touch base with this last slide here before we get to some questions. And I'm not going to spend a lot of time on this because I think probably to a large extent, if you're going through some type of overpayment review, you probably have some type of compliance process already in place. But maybe through this review, maybe there are scenarios where specific states have been identified where you're not currently registered and in compliance. That could certainly be an outcome of one of these types of reviews. But the major point I think I wanted to make here for you is from an overall compliance perspective, and again, we kind of touched on this earlier, is that you really just need to have a very well documented process and a good connection between all of the data that drives your sales and use tax reporting, connect it to the actual returns and easily accessible copies of all of those returns. Yes, they're all available on the state websites, but a lot of my clients, just from a best practice perspective, will pull those down off the state websites and they'll store them somewhere, within their IT systems. So again, they've got this well documented audit trail from the data to the returns to the payment confirmations as well. So that was the main piece of this. If we had a little bit more time, I'd probably talk a little bit more about this, but I'd rather hit on some of the questions that we have open. I think we've got one more polling question, Liz, and then we'll spend the rest of the time on the questions.
Okay, that sounds great. So we'll launch this final polling question. This is the fourth and final polling question. Polling question is up on your screen. Are you interested in learning more about our services? So if you would like to learn more about TaxConnex and everything that they can offer and the things they help with, then please let us know. We just want to make it easy for you. And same thing for Invoke Tax Partners. If you want to hear from both companies, then fabulous. We just know that these webinars are super informative, provide great continuing education. also introduce you to professionals to help you expand your professional network. And if you down the road find that this is something that, wow, you'd really like some help with to take that burden off of you, then we hope that you will, keep our friends in mind. So just a quick polling question here to let us know if you're interested in learning more. I'll leave this polling question open for about 10 to 15 more seconds, but let's go ahead and dive right into Q&A.
Yeah, sounds good. So Scott, Rosanna had posted this question kind of early on, but it's really kind of focused on the industries that would benefit from this type of review. And you had mentioned manufacturing. Her question was, well, what about contract manufacturing? And I guess your answer is probably going to be, I guess it depends on whether you are the contract manufacturer or are you hiring the contract manufacturer in your business? Can you
Yeah,
say a few words about that?
yeah. Typically, contract manufacturers, the actual doing the manufacturing, qualify for those exemptions, and would be open to that, obviously. And then, um, if you're using one of them, then obviously you're not making a lot of those purchases of the third parties doing that, and so you're really just paying a service fee for that piece. But contract manufacturers typically qualify for that.
Gotcha. Are there states that are easier, better to work with versus harder, more difficult to work with?
That's a loaded question, but but yes and no. There are states that are. I will say the biggest difference in most states, it's typically not the process, it's the back and forth. Some states allow a lot of back and forth where you can answer questions, provide more documentation. Sometimes the information can be a little stale. Obviously, we're deep in it, and you as well as the taxpayer. So our understanding of an item may be a little bit different and maybe more common sense than somebody that's not involved with it. And so making sure those things are documented up front is an important part of that. But the states that don't allow as much back and forth are the more difficult ones, just because you have to do so much more upfront work in order to satisfy any potential misinterpretation or understanding of an issue. Because there's not a lot of give and take back and forth. But there are a number of states that allow a lot of back and forth, and typically those are much more easy to deal with. Although you can have difficult auditors, they're typically better to negotiate back and forth with.
Perfect. Let's take one more question, and then Liz will give you an opportunity to kind of wrap up here for everyone. So I believe this is from Linda, and Linda describes. She says, Scott, you're talking about working with the vendors to be sure they're collecting tax from their customer appropriately. Isn't that really the responsibility of the vendor to research and address rather than with the purchaser? Do we have any obligations in this regard?
Yes, your hope is that they have done that research, but as a purchaser, it's really how you're using that item that ultimately determines the taxability of that item. And so a vendor can charge tax on things or make the decision not to charge tax on things. And ultimately, it's the purchaser buying that to correctly tax that item whenever that comes around. Unfortunately, most states tax both sales and purchases when they come out and look at things. And so sometimes that happens, but being able to understand how that purchase is used in your operations typically is what determines taxability. And some vendors don't have the obligation to charge tax because of nexus rules in your state that you're operating in. And so that tax liability burden falls then on the purchaser.
Perfect. Makes sense. And Liz, we'll turn it back over to you for a final comment and wrap up here.
That sounds great. Well, thank you so much, Brian, and thank you, Scott, for a fabulous webinar. And we always appreciate you taking time to answer audience questions. And we certainly get a lot of questions on these topics, and really always appreciate your specific responses. So thank you. For the audience, we want to share just a few things to recap. So first of all, to access your CPE certificate, you can log into your in-course dashboard in 1 hour. If you'd like to access the slides or the recordings, you'll be able to do that from your in-course dashboard as well. And of course, when you close the GoToWebinar control panel, we will have a course survey pop up, and we really appreciate your feedback. So if you want to go ahead and just share your feedback on today's program, that would be fabulous. And please keep an eye out for TaxConnex next webinar, which will likely be in September. So thanks so much to the whole TaxConnex team, and thank you, Scott, to you and your team as well. We'll look forward to having you back with us again soon. Until then, have a great day.
Thanks, everybody.